Casual FX. Today we are going to look at lots and pips. Lots and pips. Now we have standard lots, mini lots, micro lots, and nano lots. Now you can see that under the unit we have 100,000. Under mini lot we have 10,000. Under micro lot we have 1,000. Under nano lot we have 100. Then the volume follows 1, 0.1, 0.01, 0.001. Then you can see the dollar per pip. We have $10, $1, $0.1 per pip. Then for nano lots we have $0.01 per pip. Now, how can you understand this more clearly? You can see that 0.001, 0.0001, that is the pip, multiplied by what? Standard lots, that is what? 100 units, 100,000 units. That will give you $10 per pip. Now this means that one pip multiplied by what? 100,000 standard lots will give you what? $10 per pip. Now that $10 per pip, if you want to get 5 pip, for example, that will be 5 multiplied by what? $10 per pip. That will be what? $50 per pip. That is how much in naira, in dollar or euros or any currency you are calculating. Now you can also be any amount of pip. I will show you how to calculate pip. Now what you do is that this 0.001 is a pip. You can have 0.005, that is 5 pip. 0.007, that is 7 pip. You can have 0.0010, that is 10 pip. Now for you to get this number of pip, you have to multiply by either mini lot, micro lot, or nano lot. So for nano lot we have $0.01 per pip. And how is that calculated? It's calculated by 0.001, that is the $1 now, multiplied by 100 will give you $0.01 per pip. Per pip. So if you want to get 5 pip under nano lot, we have $0.05 per $0.05 per pip. Now if you also want to get for micro lot, you multiply by the pip by what? 0.1. If I'm getting 10 pip, that will be what? $0.1 times 10. That is $1 per pip. That is how you calculate lots. Now what does this mean? This means that if you are risking $1, for example, 1 pip, that will be what? $10 that you are going to lose, or you are going to gain. Now what does this mean? You calculate forex based on what? Pip. Multiply the pip by either $10, $1, $0.1 or $0.01. Now what does this mean? Some brokers can help you calculate this. Some brokers calculate it for you. But for you to understand it more clearly, you are trying to bring this calculation to dollar or any currency that you are going to risk. So you are working basically with the pip and the lot size. But then the pip and the lot size. If you have 50 pip, for example, that 50 pip, if you are trading standard lots, will be what? Times what? $10. That is how you calculate it and you get it. If you are trading mini lots, the units you are going to trade multiplied by what? The pip. If you are trading micro lots, multiplied by what? The pip. Nano lots multiplied by what? The pip. So that is how to calculate pip. That is how to calculate the lots size. So I'm going to look at how to calculate the pip. Now look at the pip that we are going to look at. Now welcome to Casual FX. You can see that for you to calculate the pip, if you look at towards the ending part of this chart, you will see some numbers. Look at the arrow. Look at the downward arrow and the upward arrow. Now these numbers 1.06360 and 1.06540. now for you to go from the downward to the upward, it will be over 180 pip. Over what? 180 pip. Now how do I get 180 pip? That is 1.06540 minus 1.06360. now if you minus it, to be 0.00180. that is what? 180 pip. Just understand that it's 180 pip. So now 180 pip, you now multiply it. If you are trading a standard lot, a mini or micro or nano lot, multiply it by the figure. Multiply by the figure. Now that is 0.00180. Now if you see it, that will be what? 0.0180 multiplied by what? The unit. The unit. So you need to understand this very well. Understand this very well. Now, how can you know which lot size to use? Now, some traders help you to calculate the volume. You can see that if you are trading within 1.00 volume, you are trading a standard lot. If you are trading within mini lot 0.1, you are trading the mini lot. If you are trading the volume of 0.01, you are trading micro lot. If you are trading nano lot, that is 0.001, you are trading what? The nano lot. So many traders have calculated the, you just go to, when you want to buy or sell, you see a volume of 1. You understand? So if you are going to trade 5 pip, that will be 5 multiplied by what? $10. So how can you calculate? Some traders help you calculate it. So what you need to do is that you need to impute how much you want to risk. Now this is very clear for you to understand. So if you are trading the volume of 1, you are trading standard lot or mini lot, micro lot or nano lot, anyone you are trading with. This is how you get the dollar per pip. Now I've explained pips. So pip has to do with from this angle, from the lower angle to the upper angle, how far did it go? It went with what? 180 pip. 180 pip. Now you need to understand that this is how the economy runs of a country. The economy runs up and down, runs up and down. If you move from the lower part to the upper part, that means what? At the range of what? 180 differences, and that is 180 what? Pip. So what pip helps us to do in trading, helps us to understand our stop loss, and also helps us to understand our take profit or our partial profit, or how much you want to gain in the market. So that is one of the things that helps you when you want to take a trade, helps you when you want to take a stop loss, set a stop loss or take profit, or when you want to set your partial profit. So it helps you to understand it. Some brokers have to calculate. You don't even need to show yourself. You need to buy or sell. Just input the figure 1.06540, or input where you want it to be. So you need to understand that when the trade is going up, it is focusing more on the buyers. When it's coming down, focusing more on the sellers. So I will explain stop loss and take profit later.